All right, welcome in, trader nerds. It's kind of a sad day here on the farm, even though the Georgia Department of Revenue don't think I got a farm. My little pig Silas is dead. I just went to get him some pig food at the feed mill, and I come back and I'm feeding them all. And I'm like, Silas, he's not there. So I go ahead and pasture. He's just laying down dead. Nothing had killed him. I don't know what happened to him. And Beth, that was a $750 pig. The most expensive one, of course, is the one that died. Now, I've got 3 girl pigs, and Silas never did his job anyway. So maybe that's just the Lord culling him out, Beth. Well, the reason he didn't do his job is because he was always eating. He had his head down on the ground all the time. He'd never look up. Yeah, he thinks it's fattening season all year. So it's just they can die during fattening season. Unbelievable. He fattened himself too much and he died, little joker. He always had his head down eating. He was never interested in the ladies. He never looked around and said, well, hello, lady. And he had 3 girlfriends. I mean, they ain't like, oh, Silas. So we had to put him in a garbage bag. Our pigs are small. What? Yeah. Beth, take him off to the dump, okay? No. Ugh, I'm gonna have to do that. Unbelievable. I don't like touching dead things. Have you ever been to a funeral? Y'all call them the wake or whatever. And people like rubbing on dead people and they rub their hair and they go, oh, Johnny, we miss you, Johnny. And I'm like, get your hands off them. What is wrong with y'all? The hell is wrong with people? I don't know. People are messed up sometimes. Anyway, I can't even hardly, it was all I could do to get the little joker out of it. And they're mini pigs. I mean, it's not like they're huge. I mean, I don't know what they have, 50 pounds or so. That's what my little pig is. More than 50 pounds. I don't know. I'm just real sad. Maybe 100. Bless his little heart. All right, we were going to draw the big green monster today. Let's do that. Today is February the 1st in the year of our Lord. If we can pull up the dang chart. Oh, and y'all be hearing Beth hacking in the background. She's got all kind of stuff. Hey, I recorded our net lick today. Looks like we're up $13. Cue the band, Roger.
Yeah, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
58 and 42. Oh, Bill. I can't believe you went there. Bill. No, not with Silas. What was my Greeks? You done got me distracted. 58 and 42. We don't eat these pigs. They're pet pigs. 58 and 42. Unbelievable. But in my mind, I was like, we're going to make $42,000 a year on these pigs, because they're $750 a piece. And I'm like, not now. Silas dead. Now I got to go buy another boy pig. And then, inflation's going to make it cost, $1,500 to get the same quality pig. Unbelievable. What am I going to do? 74.31 is our buying power. It'll take me a little while to recover. 71.31 is my buying power. So we are green. We are green. And we are, look at there, virtually green. I mean, y'all, there's nothing to do really. What I could do, like I've been doing in the other accounts, because I know some of y'all are piss poor upset about the darn head coming out. Here's some that I've been in 28 days and I'm up 66%. Look, I'm up 70% on those 2 naked puts there. Look at that. Isn't that great? So what we could do is, take a little risk off. Now I've got a possibility I'm going to go under on my Theta, right? But I don't know, take risk off. Let's do that. Let's get that 70-something percenter. Close position. You can close one. We're going to close 2 of them. In celebration of the life of Silas. Oh, my kid's going to be so upset that Silas passed over. Chili Jordan's tied. All right, so we're out of that. Now, what we've been doing is buying a little bit of hedge, haven't we? But remember yesterday, Avi come up with this great idea. He's like, Bobby, why don't you buy your hedge in the ES? Instead of buying all these rinky-dinky hedges in the, I thought, man, that's a good idea. So what we buy, we could over here and just buy us just one, couldn't we? And we were buying stuff at 50 cents over there. So we could buy something at a dime or a quarter or something over here. I don't know. Where you want to buy it? I don't know, 30 cents. How much is that going to cost, right? You got to figure all this stuff up. So if we buy this one, the 3,400 for a quarter, how much that cost us? That cost me $15.87 and gives me a phenomenal amount of protection, doesn't it? So if I was doing the ES, what I was doing, or the micros, what I was doing is going, okay, we're going to buy 2 at this 9-day, right? And we were going down to something that was costing about 50 cents. So let's see what that would cost, right? If you went down here at 50 cents and said, I'm going to buy 2 of these, how much that cost me, right? That was costing me $9, right? So, I mean, I could sit there and go, well, I ain't got to buy 2. Now I could just buy 1. So we could even go further out on the ES, right? And get a nice little hedge there. You spend $10. So we'll go ES, we'll go 7 days. Why 7 days? I don't know. And go down to 20 cents or so. 25. What is that? Did I buy some the other day? Look at there. I bought. Oh, that's my order. Let me tell my order. You know, you go down to 20 cents, 10 cents, buy you just a little bit of crash protection. If you bought something for 15 cents, that'd be $10. And I think we're getting more protection further away from the money, but this is what we're wanting it for. We want it for crash protection. Look there, it increases my buying power by $6 and $607. Isn't that great? We just buy us a little short-term protection. We don't have to be greedy. So that did knock my theta down. I know. But that's fine. We'll worry about it tomorrow. Don't worry about today. We kicked our theta down a little bit. So now, you know, if I close one tomorrow, I don't necessarily have to buy that. So I don't know. It's just kind of fun. All right, let's go to the other account, see how we're doing over there. Let's go this. So we got our stuff in there. We're good there. Let's go to the other one. Market's down 0.59%. Wayne, who cares? Right? Here's our IRA account. In our IRA, we are at 108,552. 108,552. Down a little bit. 108,552. That's nothing. We don't get to play no music over here. And that's fine. 108,552. Still doing great. Right? Let's look at our Greeks and ratios. Greeks and ratios are 175 and 95. 175 and 95. Boy, that seems like a lot, doesn't it? 175 and 95. There we go. I like the fact that my theta is bumping up. Look at there. 95, 94, 95. That's okay. We know that this is at 19, the VIX. Our buying power usage is 25, 122. 25, 122. Let's put that in. 25, 122. All right, so let's look at everything here. A little red, a little blue, a little green. I mean, we got the, what is that, a Mexican flag or something? Blue, green, and red. So, you know, we need to be a little bit shorter, but we need a little theta. So if something's this and this is blue, I can put on another trade. Now, let's see if our thing is showing that we need to take anything off, right? Let's go to our trade tab. See if we get an auto close date on anything. Nothing at all. Okay. So let's see if anything is, you know, 60, 70% profit. See if there's something we take off. Let's go look at our naked puts. Naked puts. And here we go. Look at there, y'all. I got something that is 75% profitable. Are you kidding me? I mean, take it off, Bobby. That's a 3,300. Take your profits. Create closing order. So we'll close him. We're going to try 750. We won't get filled, probably. Well, we did. Look at there. They just proved me wrong. 3,300 at 750. Let's go find him. 3,300 at 750. Probably up toward the top. 3,300 at 750. 3,300 at 750. 3,300 at 750. Let's close him out at 750. And you and I made a sweet little February profit of 2, 1, 23. You and I made, well, hello, ladies, $109.56. Fire up the
Well, we're moving on now to the side, to a deluxe apartment in the sky.
All right. So we cut us a little profit there, right? So we made $109. You know, would it be too much to ask if we went in and bought us a little protection over here? So let's look at our analyze tab. Let's just see what our risk is, right? So our risk in this account is, let's get rid of all this, get rid of this. We'll hide simulations, move this to today's date. And our risk in our account says if the market were to go down 20%, we've been down 39,000. But if volatility went between 50 and 60%, we would be down 87,000. Okay. Well, I'm not out of business on a 20% down move, but that's still a lot, right? Still a lot. So why don't we do one of those little ES trades over here? Let's just use a little bit of money. So ES, let's go 7 days out over here. Yeah, am I going to do this every day? No, I just like showing y'all. We're just playing with some stuff. We're just playing. We're seeing what it does to our account. All right. So if we buy that for 15 cents, that's going to give me $323 of buying power relief. It's going to cost me $9.32. And let's analyze it. You want to? Let's analyze this little puppy and see what it gives me. I said, let's analyze. Here we go. So hide positions. And let's see, just our simulated trades. Make sure it's the only one we got there. No, it's not. We've got another one there. Let's get rid of that one. So there's our 32.20. Look at this, y'all. That gives us $8,000, $7,000 to $8,000 of crash protection for $9. I mean, someone tell me why I shouldn't do that. I just made $109. Can I in profit? Can I not spend $9 of that on a little bit of a hedge? Yeah, I think so. So let's do that. $9.32. I said, let's do it for $9. There we go. So we bought the 32.20. This will be the first time we put an ES trade in our little thing here. Let's do that. 32.20. See if it works. ES, they'll be like, man, you ain't chose one of those in a while. So we just bought one of those. Isn't that great? Groovy stuff. I said we just bought one of them. Stupid new Logitech keyboard that's twice the money of the cheap one that I had. So we'll call this long put 3. And we bought the 32.20.
Bobby, do you want to call that one like ESLP or something, just to like show on your sheet that it's ES?
Yeah, I could do that.
Well, I mean, you got the symbol there. I don't know. I don't know if you want more.
Yeah, it wouldn't hurt to kind of really differentiate it. And we're just playing, y'all, right? We're just kind of seeing. I mean, I like the protection, and Ed's probably freaking out because he's got the FOMC stuff coming out today. So you know he's flipping out.
Actually, I did a trade this morning, so I'm not freaking out too
I'm
bad.
proud of you, Ed. You're doing great.
Thank you, Coach. Thank you. Thank you.
So
and look, it was like you started showing us in this account that you were kind of high on Delta and just a 0.01, not low on Theta.
Yeah.
And you're like, okay, I might want to put on position. And then we went down this area, which is great. You went to basically first you looked at risk that you could take off, I'm thinking you want to take off the profitable stuff and then put on new risk with fresh credit. So that was like where you were going. But when you took off that other risk, we're going to call it the all used up risk. Then you went and bought some protection, which I think is a good step to add some net longs to the account as we've been talking about. And I'm guessing your next step might be to update your metrics and see where you are and then put on another trade. Is that kind of what you're thinking?
Yeah. I wouldn't even look really at the metrics. I was just going to put on another trade, but we can kind of compare and contrast. So let's see where we're at now. So, because our game is moving risk from 60 days, moving it out to 90 days. Why? because we're further away from the scene of the crime, right? We're doing that little puddle thing. So we're 172.93 now. Let's see what that looks like. 172.93. Okay, that was good. 93. So we didn't really hurt ourselves there. And we're really not going to hurt ourselves when we go out and put on a little more risk, right? So this one doesn't have the little cool spreadsheet that has, oh, here's how many things we got and how many whatever we got. But, you know, what do we want to do now? So why don't we go out and let's go, let's trade the micros like we normally would. We took something off. So let's put another one back on. Now, I may even put two on because we got a nice down day, 0.54%. So why don't I go over here to 86 days? Now let's put a naked on. We'll do a two trancher. I mean, it's hard for me to keep my theta where it needs to be. So now remember, and Ed, y'all help me explain this, because we're going back to Mr. Bertino again. As much as he hates me and wants to shut me down, Mr. Bertino is a smart dude, and we'd be stupid not to listen to what he said about the weighted Vega. So what we're saying is this: we are putting, you notice I put that protection at 7 days to expiration, right? And so if here's today, we put our protection at 7 days out. So if you throw a rock in the pond, this is the way he explained it, the volatility is really going to be high in the splash zone. So volatility is going to make that option really, really explode. Now, here's what we're doing though. We got all these other expirations that are farther and farther away and farther away from the splash zone. Now, here's the problem. Let's just make up a number. This one has a Vega of 1, and it's not 1, it's a fraction of 1, but unless we're just using whole numbers to show you. And this one has a Vega of 7. So what you're saying is, well, Bobby, it's stupid. You should be putting your protection here rather than here. But he's showing that there's weighted Vega and that the splash zone, being further away from the splash zone, we don't get killed by Vega as much out here. So put the hedge part closer, put the naked out farther, because we're farther away from the splash zone. And the farther and farther away that you get, you know, the bigger that those the ripples are, right? So we're trying to get way, way, way out with our selling our puts, and we're trying to get that little splash. If something happens in the next 7 days, volatility will really pop up that little one that I just bought out of 7 days. Okay. So make sure, did I explain that right? Everybody kind of groovy with that? So let's go where we normally go. Let's go to this 12% probability of money. We don't have anything there. And let's sell 2 of them.
Bobby, was that one that you closed part of a triple nipple?
Yes, I think it was. So this one is more or less a roll, right? So we can call this a roll, I think. So we don't have to necessarily do the put debit spread. Yes. So 29.25, look at there, the mid is 30. What if we could get 29.75 for it? Don't be still my heart. Give me a credit, somebody. Look at there. So we sold to 35.90 for 29.75. 35.90, 29.75. 35, I'll never remember that. 35.90 for 29.75. 29.75. And if memory serves me correctly, that was 86 days out. Now, correct me if I'm wrong. We sold 2 of them puppies. So we're going to call this NP 15 rolled, right? Because we rolled him out. Let's just call him a roll. NP 15 roll. So that means I'm not going to do a put debit spread with him. No, don't need it. And so this is a naked 86 days and 2/1/23. So now let's think what we've done. We have closed 1 naked put. We bought how many naked puts? 10. Everybody see that we bought 10? You said, wait a minute, Bobby, we bought 1. No, we bought 10. Actually, we bought 10 micro puts, right? Because micros are 1/10 the size of an E-mini. So we bought 10, we closed one, we bought 10, we sold 2. Isn't that cool? All right. Questions on that? Isn't that fun? That fun. Now let's see what we did to our, our Greeks now. So now we're 183.97. 183.97. 183.97. Okay. I'm worse for the wear. I made myself worse. 97. We increased that. That should make that maybe hopefully be green now, finally. Am I there yet? Not yet. I'm getting there. We took a little risk as far as deltas go, but I'm risking I'm comfortable with. And I'm sure we use, let's see what our buying power went to. 25,122. And we're at 25,813. $700 more in buying power. Okay. I'm good with that. Everybody good with that? Y'all trying to see what we're doing? So the game is this. The game that you and I play, and it is a game. It's a serious game. Is we take risk at 90 days, we take it off at 60 days, and then we replow it back out to the 90 days. That's the whole plan. Why do we take it out at 90 days? Because of this, right? Because of the weighted Vega. Right here, we say the Vega's higher, but it shouldn't influence the price of our options as much. We got a lot of space in between us and the scene of the crime. This is where the crime happens. This is where the crash happens. And then it's a bloom, 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 bloom. But each wave gets farther and farther out, and it's not as dramatic for us out to 90 days. So by the time we get to 60 days, we're like, screw that. We're out of here, baby. We're getting too close to the scene of the crime. We're moving it back out to 90. That's the entire game. So your whole game is keep Theta in the account, keep Theta in the account, manage risk. Give it Theta, feed the beast. Well, we fed the beast today, didn't we? We put on some, but we fed the beast. We increased our Theta to 98 from what we were yesterday, 94. Beautiful. Beautiful. Okay. So let's go to the other account. Brett says, not that I found longer DT is more volatile and premiums tend to get stuck once they're elevated. Okay, hey, that may be. Brett, tell us about that. How long have you been doing it? I mean, to where you can, I mean, Vega can still jump and premium will explode. Oh yeah, that's true. Yeah. I do need a piggy that can wiggy with the ladies, no doubt about it. Instead of one that keeps his little head down all the time. I guess he saw me eating it all the time. He's like, hey, I'm gonna eat like he does. So we're not saying that this is perfect, and we're not saying that we're not going to be hurt with Vega, but I don't know. This is the safest I've seen us be able to do this thing. If y'all got a better way, hey, I am all ears. By the way, Evan and Ed did this little chat room thing. What is that called, Ed, that y'all did today? That was really cool. We need to do more of those.
It's just in the general, it's in the Discord. It's in its own little section. Let's see what it's called.
It was really cool though. I love that. I was listening to
It's voice channels underneath Trader Resources and right above open a brokerage account. It's in there.
I wish we had one of those going all day. Wouldn't it be fun just to go in there and y'all just chat and talk? And if you got something, you know, or just, you know, whatever. I don't know.
Yep.
I don't know how you do that, but I would rather listen to y'all talking than I was listening to Tasty Trade at the time. Then I saw, hey, look, they got the little chat thing open and it was really good. You know, a lot of people were participating. It's not recorded. And it was really, really good. So we're down $47 in this account. Let's see what we're going to do over here. So.
And look, I also want to point out, you know, Brett made the comment that he's not seeing this with Vega, and he said, but that's with individual stocks and not indices. So, you know, as you're indicating, which we keep indicating, this is what we think is the case. We're going to find out over time when we're operating as if it is the case. So we're going to have to wait and see. I do see where an individual stock or an ETF that's like a country-based ETF, something like that, it is going to potentially hold on to elevated metrics differently than an index would. So I wanted to throw that out there. I don't have the answer, but in my mind, I think an index will definitely operate differently than an individual stock would, as far as the weights go.
Well, Bill, I don't know how I found out about it. I was just looking through everything and it like popped up the little microphone type thing or something like a speaker. I mean, it was really good
Yeah,
though.
you can just look in the voice channel. If someone's sitting in there, you just join it. And you can talk to them. It's like a Zoom session inside the Discord.
But I would love for y'all, if y'all want to, somebody, I don't know who's in there, y'all could talk, whatever, but have a little chat channel going all day. And I'm not saying that Ed and Evan got to do it, but just be nice to have one just set up that, hey, it's open during the day. If y'all want to go in, chat, talk about trades and different things, it'd be kind of fun. I don't know how we do that. We'll look into that. We'll point Ed in charge of that. Ed, you're in charge of that. Beth laughed on that.
Tom, nothing with her.
Good. All right. So look, y'all, we're a little long. Our theta is at 0.10%. That's where it needs to be. Now I will say this. If we're going to say, hey, what are our findings so far? I will say this. And let me ask if any of you have noticed this. It used to be that if we were down 0.5%, my account was up. And I have found out since we are going to negative 90 days, now the account's usually down if we're down. So I don't know what happened there. Does anybody have an idea of what happened there? Maybe that's what we're talking about. I mean, have y'all noticed now that we're doing the 90-60 rather than the 60-60, all in the 60, that when we go down, it seems like when the market's down, it seems like my account's down, whereas it used to be my account was up when the market would go down. I'm not sure how to interpret that.
I think the reasoning is because we're putting on these hedges.
Mm-hmm.
Our valley of death, or the cost of these hedges, is usually kind of lining up with the put debit spread. And I think as time went on, your put debit spreads were maturing and providing more profit than the market correction was affecting you, if that makes sense. So now that we're putting on our protection to the downside, we have the market working against us, our protection to the downside working against us. And I think they're kind of outpacing the put debit spread a little bit. And that's why we're seeing the negative return on the down days. But the alternative to that is that we don't have the protection if we want to see our account go up on down days.
Okay.
So
yeah. And I think we've all decided, hey, we do want a little bit of protection down there, right?
Yep.
That's what we kind of want to do. So let's look at the risk in this account. Let's look at the scary stuff. This is scared the children. So here we are, MES. We will hide simulations. And there we go. So here, that looks rough, right? So here you go. On a $29,000 account, we're losing $25,000 if we go up to 60% volatility with a 20% move down. All right, that's not too, not really good. So let's go over here. And let's see if we can, number one, take off some of our closer in the money risk. Something that's closer to the splash zone. Yeah, and hey, maybe at the end of this, we'll say, that stupid Ron Bertino, that son of a gun, he didn't know what he's talking about. Okay, maybe that's the case. So here, y'all, I mean, how greedy does a man have to be? We've made 70% on these naked puts. Let's take them off, right? They've only been in here like 27, 28 days. Normally I've been letting them go to 30. I could let them, go down a little bit more, but all I'm saying is I'm going to replace them. Now, let's see what it does when I replace it. Let's just see what that does. So right now our theta is 29, right? Let's see what happens when we take these off and put something on back on. So let's go take those off. There we go. So we're going to close 2 of the 3330s. Okay, closing order by 850. We're going to try 825 because we are greedy. And shwinga. And we're out. Now, quickly, let's go and do the 86 days, right? And do a 12 delta. 12% probability of being in the money. So let's do 2 of the 3580s. And let's sell those at Try 29.50. And let's see what happens to our theta. I said, "Ugh." Bet you're making entirely too much noise down there. What are you doing? All right, we're feeding. So let's see what that did. Let's see what our theta is now. You think we'd probably be around that 29 still, right? Or maybe even higher. Shouldn't we have more theta out there? Yeah, look at there. Now see that's the game. That's the game we play. Taking it off as it gets closer to 60 and then just putting it out there back at 9. And look, we increased our theta by doing that. So now we're at 67.31. What did that do to our deltas? 67.31. Just wanted to show that to you. 67, we're a little longer, right? And 31. 67, 31. If we hit that to 31, I should be green now. Ta-da! Now, here's the problem. Here's the problem. Now let's see what it looks like on our little thing. Now, keep in mind, Mr. Bertino is going to tell us that, you know, some of this stuff is wrong out here. So we still got $27,000 worth of problems to the downside. You know, what models do we trust? He says the Black Scholes doesn't account for stuff out there. Okay, I got you. So what are we going to do? Even if it's close to this, though, we don't want to lose $27,000. Beth would be so upset if we had to lose $27,000. By the way, do you know how much a new transmission for my 2011 Rogue is going to cost? Yeah, I about threw the phone down and dropped down in the fetal position and started crying. Y'all know how much I don't know this car is worth this amount. Any wild guess? Ed, how much would you guess a transmission for a 2011 Nissan Rogue is? Brand new transmission for them to put in. 3,000, 3,900. How about this? 40, Beth, was it 4,800 or 4,600? I almost cussed them out. I really did. I said, what? And I said, let me pray about it. So I'm still praying about it. But then I go, what other car could I buy for 4,800? Right? And you can't buy a 2011 Rogue for 4,800, even though it says that mine isn't worth for. And then if you do, it wasn't driven 25 miles an hour by my mama for 5 or 6 years before I got it. And I know it's got my chicken nuggets in the bottom. It ain't got nobody else chicken nuggets and french fries in the bottom. It's got my crumbs in the bottom. You know, it's mine. It smells like me. It's got that wonderful old odor that I have, right, Beth? If you say so, she said. So I don't know. I just think I'm gonna probably have to bite the bullet and just do it. Just do it. Just pay for my little $4,800 transmission and be done with it. All right, what were we doing? Oh, so we thought, hey, let's buy a hedge. Okay, so let's see. Now it's gonna hurt everything. It's gonna hurt your metrics. I just got my thing up, but you know, y'all worried about FMOC and all this kind of stuff. So let's go, let's buy something in the e-meetings. 7 days. Why 7 days? I don't know. Y'all tell me a better place to do it. And we bought something for $9 a while ago. Now, what's this? This is what we like. What kind of protection can I get for $9? Let's just see. Analyze trade. I think we've already done this, but my attention span is so short that I can't remember. What, Beth? Beth? I'll be taking your minivan and you'll be taking my chicken nugget infested little car if you don't. Beth, stifle yourself. All right, so it says here, if the market goes down 20, let's make sure that's the only thing I got down there. Yep. So if the market goes down 20%, it says I'm going to make $4,000 for spending $9. But look at this, y'all. I'm actually going to get between 7,000 and 7,600 if we have a crash. That is worthy of paying $9 for. Would everybody agree for that? Is there a person here that says, well, that's dumb, Bobby, paying $9 to get, you know, $8,000 of protection? And look, if we go down 35%, like the COVID crash really fast, you know, you making some money there. So let's do this. So let's confirm and send. Okay, so this was Avi's idea yesterday, and I thought Avi is like a genius. So I was thinking about something today too. And then I said, well, hey, Bobby, if you're going to do that in the ES, you ought to start kind of looking at the Sweet Bobby hedge from the ES. Now, I've got experience with the Sweet Bobby hedge diagonalized in the ES. Yeah, I remember that puppy. I remember it well. That's when we were up 208%. I remember that well. So, you know, you can start looking at some of those too, right? You can sit there and go, okay, let's see what that would do. So you can start going, what if we go down to the 90-day? Let's just see what it would take. You know, how's the buying power and all that? Let's just look and see what it would do. So if we went out to, you know, 90 days or so, and let's just see if we can set something up. Let's go, you know, I don't know, wherever you want. 12 delta, 13 delta. Let's say 12. Let's do a 12. Let's do something nice and even. 35.50. That's a nice, even little thing. 35.50, right? So if you sold one of those, and then you went to the 80, to the 58 days, 35.50. Let's see what we can do this for. So let's try the 3,500. And I like what Nick's doing. He's calendarizing these things. I like that too. Let's just see what we can do. So 3,550, let's do the 3,500. Let's just see what this thing can do. Okay, so there's a Sweet Bobby hedge. I'm selling the 35. 35. Now I could do the 35.10. Let's see. Let's do it traditionally though. Getting a $13.50 credit. How much buying power is that going to take? What's all the stuff on it? Let's just look at that. So let's analyze that trade. So we go over here. Let's just see what it's going to do for us. Kind of cool, right? Hide positions. Let's make sure that's the only thing we got out there. Yep. So what is that? We're selling 35.50, 3,500. That doesn't look good at all. Where's my price slices?
Wouldn't you need to buy two?
Oh, well, thank you. Yes, that's exactly how you do it.
Okay.
Stacy, Stacy, I was just,
Hey, I'm
like-
new to this. I was just making sure.
okay, unbelievable. How dumb am I? Okay, so that's about a break even. It's a little quarter dead, right? So let's see what this thing does. Thank you, Stacy, so very much. Let's see what this does. I started to say that didn't look right at all. So let's see what this gets us. It gets us negative deltas. Okay, that's good, right? Because we got kind of need a little bit of negative deltas, right? We're a little long. Negative 22. Now there's where you sit there and go, rah, negative 22 theta. We don't want that. And really no effect on buying power. Now, here's the problem, right? Is it negative theta? That's what we gotta ask ourselves. Is it really?
Bobby,
Yes.
a notion came to me
Mhm.
last night when I was thinking about using the ES for our hedges, like, you know, like Avi did. And it occurred to me that theta that you just had there at 28 points of theta,
Mhm.
or dollars of theta, or that you got there that you're suffering from. And I thought to me, when analyzing my portfolio, to separate the hedges out and don't count them.
Yeah, don't count that negative theta,
Because
right?
that negative theta, that's a sacrificial anode. You're fully intending on driving that one to zero.
Yeah.
And you're never going to recover it. You've written it off, and it looks bad in the metrics. But what did it cost you? Nothing, almost nothing.
Almost nothing,
So-
almost a break even, huh?
Yeah, and where I got this was partly because of this, but also I don't trade MES only. I got GC. I'm trading the 10 years, and I'm trading crude as well as the micro E-mini. So I've been wondering if the numbers I'm plugging in are not really accurate for this kind of study that you have, you know, the metrics on the spreadsheet. and I'm thinking of abandoning all the other positions except for micros.
Mhm.
And then it got with this very thing that you brought up. That's why that's what my hand was up for. I didn't want to interrupt you.
Oh, I
but
didn't see
when
your
you-
hand up, Kim. My apologies.
Well, yes, you were on a roll, man. So the but when you got that negative 28 there on your on the theta, this was the time to bring it up because that's exactly what I was trying to figure out. Is that really ruining my metrics? And I think the answer is yes, because all my hedges, I intend to take them to expiration. So,
Mhm.
and they don't cost me a lot of money. So why should I, get that? And that takes a huge amount of theta. A 28 theta that's off. I mean, that's going to mess up your metrics. So anyway, I've said it 3 times, so I'm going to shut up now.
No, that's
Tim,
really
while we're
good.
on this, I have a question for you.
Yeah.
So you said a couple times that you're taking this to expiration, but if we're doing these calendarized and you're selling your short put at say 90 and you're buying your longs at 60, do you intend on having a naked put on that you're going to ride out for 30 days?
Oh no, I'm sorry. I was when I made that statement,
expiration.
I was thinking of just the long puts
Okay,
that I have
so
for hedges.
you're going to have to pay a debit to remove that short put. And I think
No,
that's
I'm not.
part
No,
of,
I don't have short puts. I'm not doing the Sweet Bobby hedge where I'm selling. I did in the past. I'm not going to. I won't let those naked puts ride to expiration.
I know, but what I'm saying is we're going to have to pay to take them off. And I think that's a factor that we have to account for.
Oh, well, that's why I'm riding those long puts to expiration. I just bought them. It's a loss. The only time they'll ever be useful to me is in a crash. And so, I mean, I don't, maybe I'm not explaining myself well, or I'm not understanding you well. But
I think you're talking about just purchasing long puts outright, right? No Sweet Bobby hedge.
no, I don't do the Sweet Bobby hedge.
Okay, so what he's looking
Now, I
at here
have in
with
the
that
past.
negative theta is the Sweet Bobby hedge.
I'm sorry, say that again, please.
I was just saying what he's looking at here with this example is the Sweet Bobby hedge.
Yeah.
So
But he
he's
had
going to have to
negative-
account for the fact that he has to remove the short put. I understand what you're doing. You're just buying the longs and you're letting him go and you're not worried about it. But he's going to have to remove the short put. So I think that negative theta is going to be a little bit more important.
Okay, well,
For
that's
him,
what it is what when I saw the power of buying those cheap short-term puts, and I added up the cost versus doing the others. This is I find it's I find it's a whole lot easier. The best hedge is a long put, and it just costs you.
Well,
And
it is simpler too, right? I mean, you
Yeah.
sit there and go, hey, look, when I close something, I'm taking profits. I took $109 profit. Okay, use $9, $10 of that and buy you a little protection just to protect you the downside.
See, exactly, Bobby. And what that does is, right, it's like a tax or a toll.
Yeah.
I don't feel the sting of buying these. I mean, even I got some E minis that are long puts, and it's like, what is it? It's less than $50. And I got lots of hedging for my account. To me, it's worth it. This morning, I was playing around with the idea of selling a nearer term put to cover the little cost, the $50 or the here and whatnot, and just kind of let it watch it and just let that go. But anyway, that's just thanks. I didn't want to take up the time here because what we're talking about, I think, is important, and I've said my piece, and you had some good criticism there about what I was saying. So thanks.
Yeah, good discussion, y'all. And I appreciate y'all opening and talking about things. Now, the cool thing is if I put this on, I still got positive theta, right? We don't know if this is negative theta on this thing or not. Look at there though. And then you go crash, baby, crash. Now, if you got a 12% down, you still got a hit of, let's say that volatility goes to 31 or 41 on 20%, 12% down. So you're down $2,600 to $4,000. But if crap, hits the fan, you certainly are at least protected the downside. So I think the cool thing is you got to figure out you know, what is your risk tolerance? And I hate to say that you kind of need to figure out, you know, what's going on in the market, what's going on in the world. We don't really look at news or anything like that, but it is kind of cool that if you go, man, I think we're on the verge of nuclear war. Okay, well, here you go. It cost me what? $12 some to put this thing on, you know, nothing, $17, whatever it was. You know, you protected the downside. So all different kind of things that we can do here. I think this just opens up all kind of things, you know. Now, you know, you don't want to get, the thing is the black swan happens when you least expect it. So the only time I got lucky was on the COVID crash. I just kind of felt, hey, this is bigger than what people are thinking. I remember my boss with the government saying, okay, y'all, take your laptops home today. I'm like, what? He says, I want to make sure you set up that you work from home. And I go, we're not working from home. We never have. We never will. And next thing you know, you're working at home for a year, you know, with the COVID crash. And so when we started taking that thing serious, I said, man, I'm going to put these things on crazy. And I put on a bunch of these things and was rewarded handsomely. So, you know, what's your risk tolerance? You know, what's your market opinion? By the way, let's see if we got our little thing up real quick. Yeah, here we go. I'm going to draw this really quick, okay? I'm not going to go through and do the teaching part, but let's see what our big green monster says. So we'll do it on the micros, which is what we've been trading. You can do it on the E-minis. It should be about the same thing. Notice that the volume point of control is the same as the market profile point of control. So I'm going to draw from the bottom to the top for the month of January. Then I'm going to anchor this little puppy, edit properties. If you do not know how to do this, we have a class called Big Green Monster. So the high and the low is 4109.25. 4109.25. Bobby, where are you sitting now? You're going fast. I know. This ain't the class. I'm just drawing. 4109.25. And the low is 3802. So let's draw this puppy. See what the big green monster is telling us for the month of February. All right. So we'll hit OK. Now we'll go get our other little thingy. And that's this little puppy here. So we draw from the 50 to the center of the point of control to the 0. Every time I do this in front of y'all, I'm like, I'm gonna forget how to do this. And that's why I got to do this. Y'all keep me accountable. If Matt's here, Matt will say, Bobby, that ain't right. I'll be like, yeah. All right, so we drew that. So now we got to activate our little thing. And we move our 0 up to our 200 line. So let's do that. Let's go right click, activate, power activate. So we're going to move our 0 line up to our 200 line. 0 up to the 200, I say. That look right, everybody? Yep. Then we're going to grab this little puppy, our 100 line, and we're going to lay him right on top where we started drawing that little thinking machine. That's there. Yep. Hit the escape key. You can play this time and time again if you want to. And we're going to go right click. We're going to go remove that drawing. And we're going to name this puppy. Edit properties. We're going to call this is January. So we use actual January prices to predict levels, oversold, overbought, fair value for February. And here's what I do that Blake Young doesn't do. I set this color all to the same color, and I call it the big green monster, which he does not call it. Now we'll go back to volume profile and see what we got here. Now, this thing will blow your mind as it goes throughout the month. So let's see if we, oh, no. We don't BS, we don't micros. Come on. Come on, little feller. Why is it taking so long? You know, every time I upgrade something in my house, it's like stuff has to take so much longer. Hold on, let's go and let's fix my stuff. Every now and then, y'all, if you're keeping this open, you need to go to your help. See all this garbage? You need to collect your garbage. Collect your garbage. Go back to charts. And let's see if I'll pull up now. Nothing. Jack squat crap, nothing. Now I thought I had waiting for data. Unbelievable. Here I am showing off in front of my friends and family. Here we go. Okay, so it looks really, really good. Who's calling me from Birmingham? Hold on a second, Joe. Tuscaloosa. Hold on a second. Hello, it's Bobby. Oh, test. They don't have all tornadoes down there. So they're calling all the professors. All right. So we are what? Fairly priced. Right? Fairly priced. We anticipate this to be a magnet. This is our point of control. We're never shocked to see these little gaps where there's extra volume traded here, volume traded here. This is a vacuum as well, but wouldn't surprise us to go back to here, try to test these levels before we actually go back up to the 4103. Now we could do that in reverse order. We could go to the 4103, back to the point of control, back to fill this, and then maybe all the way up to, it'll be interesting to see what the upper level is on our little thing. 4193, the top of the fair value. But right now it is fairly priced, Magnet, magnet, magnet. You got three magnets. So if it doesn't go up, it goes down. And we know what that looks like. It's what's called a probability cone. And your little probability cone looks like this. So for the next 10 days, that's what I expect. I expect price movement within this area for the next 10 days. Let's look at skew. We never look at skew, but let's look at it. Let's go to Tastyworks to look at skew. We're doing some things we never normally do. Go on our little session, a little long. Let's look at skew. Skew. See what skew's at. Let's go to the chart. And it's just a daily little thing, right? A daily little 123. Skew in the last, whatever this chart is, what is this, back of April 4th of last year, got up as high as, what, 145? Skew is 123. Now, skew is upticking. You can barely see those little dots, right? It just gives it a little dot every day. It is upticking, but it's not to a point to where I would say that the market is fearful of any type of crash. We got Putin, we got all kinds of stuff going on. We are ticking upward, but if you look at the linear regression of this, I wonder if we could find what a linear regression is of skew. Hold on a second. Let's see this. Let's see if we can do this. Trading. I wonder if I've never looked at skew on Trading View. Let's see if we can get that. Skew. Be neat to see. I bet it won't let me do it. It'll be neat to see what that looks like. So let's look see what our linear regression channel looks like. So we are above the 50 and we're above the 200. It looks like bulls away in this little thing, right? Everything looks good there. I don't see any point of concern there. Let's see if we can type in skew here. SKEW. SIBO skew index. There we go. Yeah. Okay. So skew, you see, is in a linear regression. That's just kind of straight. Now, interestingly enough, it is kind of at the upper bounds of the linear regression channel, above the 200 and the 50. And but it's not up to here. It's not elevated to this point. So even though it has been going up, I don't see anything saying that the market itself is showing any indication that a humongous drop is inevitable. Isn't that cool? All right, guys. Awesome session. Y'all be good.